Hey everyone, it's Dave Hathaway on another educational episode. I'm bringing on a guest, Mr. Dan Covington, and we're going to discuss how appealing your property taxes can save you thousands. This is something that I have knowledge of and I've done before, but obviously better to have a specialist on that he owns the company. Dan, he's the owner of Maryland Tax Appeals, a company that we have actually used to appeal on some of our properties. He's a graduate of Towson. He's local to Maryland. He's been involved in, sounds like everything real estate, from tax liens to rental properties to being a real estate agent. Done it all, been it all. So he has a good perspective on tax appeals and real estate in general. Did I miss anything, Dan, in that introduction?
I think you got everything. Thanks for having me on your show today. I appreciate it. I'm glad to help out. Hopefully we can help somebody out today.
So our show is to help normal people become real estate investors or become better real estate investors. So hopefully we can do that and save people some money, especially those that have properties in and around Baltimore or Maryland, because that's where Dan's company's services. And to hedge that, I'll just say that the tax appeal process is not the same in every state. So what we talk about today might be slightly different if you're in a different state, but the overall concepts are gonna be mostly the same, but you might have to go about it a slightly different process. So with that being said, if you guys stick around, Dan's gonna share with us how much his average client saves, and he's going to share with us his biggest tax savings from a client. But with that said, before we get into how you do a tax appeal, I think it's important to understand tax assessment. So can you just share with us what a tax assessment is, why it's important to a real estate investor, Dan?
So a tax assessment, also known as a taxable assessment, is a value that the state has placed on a piece of real property. Every property gets a value, and that value is used by the local municipality, either the county or the city, to calculate the annual tax bill. And it's as simple as taking the taxable assessment multiplied by the tax rate, and that determines the tax bill that comes out every July.
Gotcha. And every state in the U.S. has a tax assessment? Is it a federal thing?
I'm not sure about every state in the U.S., to be honest with you, but I know Maryland 100% assesses every property, even properties that are exempt. They still get a value. Even government properties get a value, and that value is used to calculate the tax bill. Now, not everybody pays a tax bill, and some people have credits and whatnot, but exempt organizations don't have a tax bill. Government buildings obviously don't have a tax bill.
Gotcha. And why is it important for investors to know about tax appeals and their assessment value?
I think it's something that can be overlooked. Annual tax bill comes, and a lot of times if there's a mortgage on the property, the mortgage company pays it out of escrow. Even if somebody has to pay it themselves, they may not even know tax bill comes, tax bill gets paid. You may not even know that there's a recourse to get a reduction in that tax bill. And a lot of times the tax bills, especially in Baltimore City, are substantial. They can eat 2-3 months of profit right off the table, if not more.
Yeah, I mean, we recently, just this past year, one of our tax bills went from $300 to $35,000 or $4,000. So if you're not paying attention, that is a large jump. And I think that what you're saying is that's not uncommon in the city or in Maryland in general.
To go from a $300 tax bill to a $3,500 tax bill, I would say is relatively uncommon. But a $3,500 tax bill in Baltimore City would be the taxes on about a $150,000 property. That's not a very expensive property, $150,000, and a $3,500 tax bill is substantial.
And how can people go about knowing what their assessment is, determining if they should do a tax appeal?
Let's start with where to find a tax assessment. So if we can do a screen share.
You are live on the maryland.gov page.
So this is the State Department of Assessment Taxation's real property data search. If you're unfamiliar with this page, you can go to Google and just search real property data search Maryland. It'll come right up. You can search by street address, which is easiest, and by the city or the county in which you want to search for the property. So for this particular property, any property, the value information is going to be under the value row, the value information row, and the most recent assessment is going to be in the second column under the value information right here. So this property is currently assessed for $455,000, which translates to about a $10,000, almost $11,000 a year tax bill. So if you don't know what your tax assessment is, the first place you can go to find that information is right here on this page. Now, to know if a property is over assessed or not takes a little bit of expertise in the area of a property value. Now, if it's your property and you're somewhat familiar, you might be able to look at $455,000 assessment and say, okay, well, based on a recent purchase price, for example, this property was just purchased for $460,000 3 years ago. If this assessment, this taxable assessment, which is supposed to be indicative of the fair market value, if that is higher, substantially higher than what you recently paid and you haven't done any renovation work, that is an indicator that you may be overassessed. If you feel that if you went to sell this property, your property tomorrow, and you couldn't get what the assessment is, that's another indicator that you're overassessed. If you're not sure, you're welcome to call our firm and we take a look at them, no obligation, no charge, and let you know if we feel that there's potential to get a reduction in the assessment.
Gotcha. There's definitely some properties, at least in Baltimore City, that have some just egregious tax bills, whether it's, a townhouse and it's at $12,000. And it's a townhouse that's valued at $200,000 on the purchase price. Let's say you have a subject property that's in good condition and you have a board up to the right, but on the other side of the block, there is no board ups. Are you still using the comparables across the street to try to figure out what the true assessment value is? Or can you argue that, hey, I have a board up right next to my property, it's not going to sell for as much as one that has no board ups next to it, even though it's directly across the street?
You're not going to get much off with just having a board up next door, believe it or not. Now, if that board up is causing water penetration into your property, which is causing damages, and you're not able to fix their roof, for example, that could play a small part. But a lot of times, if the property's abandoned, you can get a roofer up there for a few $1,000s. It's not going to have as big of an impact on the assessment as you would like. And I know it doesn't seem fair, but Baltimore City is so block by block. Basically, it's hard to quantify what a board up right next to your house does to the property value. Is it a 10% adjustment? Is it a 20% adjustment? The next best comparable would be the house on the other side of that board up from the subject property, if that's sold, because you both share a firewall with the boarded up property. If that's the only boarded up property on the street, on that block, if the property on the other side didn't sell, you may not have a great comp. But if it's a matter of, it's not a water penetration issue, it's a matter of an eyesore, or maybe people are going in and out of the house. Houses across the street should share the same type of obsolescence that the subject property shares. And that should be indicative of the sale prices of those houses. But a lot of times you don't find a block with just one board up. Normally in Baltimore, if a block has board ups, it has multiple boards. City is tricky to value. It is. I give the state a lot of credit. They don't have a lot of people working there, and every year they have to reassess hundreds of thousands of properties. You can't get it right every time. With limited resources and a massive workload, you cannot get it right every time. So there are going to be errors. There's a margin of error, and a lot of time that's where we can come in and find where the errors are and help the owner get what is a fair assessment.
That leads us right into another question I have. What is a real estate investor or somebody that is appealing taxes? What are they going to need?
So they would need comparable sales prior to the date of finality. So the date of finality in an appeal is January 1st of the year in which the appeal is taking place. Without going too far off track, there's 3 different times you can appeal a property. One is when it just gets reassessed, which would be for the current year. You have until the middle of February. Next time is when a property is purchased. There's a 60-day appeal right as long as the transfer takes place before July 1st. And that would also be for the current year. And then the other is an out-of-cycle appeal. So if you miss the other 2 deadlines, you can file now, but now it's for next year's tax bill. So let's say we have a 2023 appeal. Our date of finality in that case is January 1st of 2023. So we're valuing the property as of January 1st, 2023. So the comparable sales that we want to use are as close to the date of finality as possible, preferably prior to the date of finality. It's okay if it's a little bit past, maybe only a couple months, 3-4 months tops. If we don't have any sales within a year prior, you can go 2 years prior. It's not ideal, but you can.
You're talking about all of 2022, right?
Right, but let's say, because Baltimore City is so block by block, let's say that there were no reasonably comparable sales in 2022, based on what you know about your street and your block. But you have a sale from 2021 that happened right across the street. That sale may be more similar than a 2022 sale that happened a block away or 2 blocks away.
Are you saying that that's what you're finding when you go to the courts, that the judges are accepting?
To put the best words on this.
There's no judges listening to us right now.
It's not, keep in mind, there's 3 levels to the appeal process. Only tax court has a judge. The first level, you're just meeting with an assessor and telling them what your opinion of the value is, and they're listening. That's it. They don't tell you how they've come up with the value. You go over your worksheet with them if you'd like. You go over what your opinion of the value is, then they review that and make a determination. Then a final notice of assessment is generated and sent. That's the results from the first level. And then that can be appealed to the Property Tax Assessment Appeals Board. If that is unsatisfactory, the appeal board would then hear the case and then make a decision. At that point, you hear the state's opinion on the value and what comparables that they are using. And then at that point, if the board basically finds what you feel is too high or what we feel is too high, we can proceed to tax court, which is the final level in the tax appeal process. That would be a judge to hear the case. So all that being said, all 3 levels, the most desirable sale is prior to the date of finality by 1 year or less. That is considered arm's length. So not a short sale, not a foreclosure, not an auction, not a estate sale. Some counties even don't like cash sales. They want to see a property that was on the MLS, marketed to everybody, that somebody financed, and sometimes they don't even like if it was owned by a trustee.
I'm going to back you up just really quick because I want to understand step 1, step 2, step 3. I understood step 1 being, hey, we disagree with this tax assessment, and they just have some employee say, I agree or disagree. What was step 2? I know step 3 was the courts, but I missed step 2.
Step 2 is the Property Tax Assessment Appeals Board. So that is a board of 3 members who have to live in the local municipality of the board on which they are on. For example, the Baltimore City Board has 3 Baltimore City residents. They are appointed only by politicians. They're put in place, and they are giving an unbiased opinion as another resident of the city as to hearing both cases, both sides of the case. They hear the state and they hear the appellant, and they make a determination based on the information that is given to them. All that being said, the burden of proof is on the petitioner. It's on the property owner to prove that the state is wrong.
Makes sense. You get to the appellate board by an agreement of the first process of step 1 of somebody saying, you agree, his written complaint makes sense. Now I'm submitting it to the appellate board, and then the appellate board agrees, and then it goes to court. Or did I totally miss something?
No, it's not called the appellate board. It's called the Property Tax Assessment Appeals Board. It doesn't matter what happens at the first level. The final notice of assessment, which is the results that are generated at the first level, it's called the final notice of assessment. That is the assessor determination of what took place at the first level. That is them saying either we are reducing your assessment or we're not reducing your assessment. It comes on a single page with 9 boxes on it that tells you basically this is the value you appealed and this is the final market value after this hearing that we've decided. Regardless of what that says, whether it stayed the same or there's a decrease, that decision can be appealed to the second level, which is the Property Tax Assessment Appeals Board.
Gotcha. So you don't have to go to the Property Tax Assessment Appeals Board.
You do not have to do anything. You don't have to file a first level appeal. Now, all that being said, if you want to get the best reduction, the maximum reduction, 9 times out of 10, you're going to the appeal board.
And you just go to step 1 and it stops. They approve the appeal right there and it's done?
Yes. Does that happen? So very rarely. I was saying 9 times out of 10, you're going to appeal board because most times they are not giving a reduction at the first level. Most of the times at the first level, they're only reducing the assessment if there's an issue with the charges on the worksheet or the condition.
Gotcha. So I kind of understand the process, and we understand tax assessments, where to find your assessment value. Next step, costs. Are there costs involved in appealing with, say, your firm? And how do those tie into an investor?
Sure. Well, if you want to have a private firm like our firms appeal the taxable assessment, our fee is a contingent fee of half of 1 year's tax savings. Okay, so if we get them $1,000 reduction for 1 year, our fee is $500. If we get them a $250 reduction for 1 year, our fee is $125. If you get a $0 reduction, you don't owe us anything. So we take on the risk of whether the assessment is going to be reduced, our time and effort. Other than that, there's no flat fee cost. There's no cost of submitting an appeal on your own. I feel it's best to have a firm do it. I mean, I'm biased because I have a company that appeals them, but it is helpful to know the people that are involved in the process, to know the process, and to know what they need to see in order to grant a reduction. It also helps to have volume that provides some degree of leverage to having multiple cases. You know, it's easier to go and hear 10, 20, 50 cases at a time than it is to go for one or two.
I know you mentioned that cost or fee structure just being a half of what you save the investor. But usually, and you can correct me if I'm wrong, you're the expert, when you get a tax reduction, usually you get it for a 3-year period in Maryland. Is that right? If you're saving $1,000 a year, you're saving $1,000 for the next 3 years. Correct, or am I off?
That can be correct. So in Maryland, the reassessment cycle is every 3 years. We're on a triannual cycle. That being said, an assessment appeal does not reset the assessment cycle. Properties are reassessed based on where they're located. Most ideal situation is that we're appealing upon reassessment, and it's good for 3 years. But that's not always the case. It may be good for 1 or 2 years. But it is going to give a better base value when the property goes to get reassessed.
Gotcha. When does that cycle start?
Based on
when
where
is
the
it?
property is located.
Oh, so it's different in different parts of Maryland or different parts of the city. Are there any risks of appealing property tax other than waste of time?
So the property owner's bill of rights says for a residential property that a homeowner can appeal their property tax assessment without the fear of retribution, i.e. that the state won't increase it just because you appealed it. So because of that, even if you give the state information that they can use against you, they won't use it against you until the next assessment cycle. But it's important to understand the worksheet and understand what the property is being charged for, because when going to an appeal hearing, they're going to ask questions that, I'm not saying don't be straightforward, but volunteering some information may not be helpful. For example, if property has central air conditioning and we just start spouting off information and hearing, oh yeah, it's got central air, 2 bathrooms, fully finished basement, and the worksheet says it doesn't have central air, it has 1 bathroom and an unfinished basement, they're just going to take notes. Okay, nothing's going to change this time, but guess what? Next reassessment, you're going to be getting charged for all those things that were mentioned in the hearing. Other than that, if there's a property that is a shell that's going to be renovated soon and the assessment is already very low, I don't think I would appeal that. It's going to bring to light that the property is vacant, and if it's going to be getting renovated, the assessment's going to be going up shortly anyway.
So they can tell, they'll base a lot of their information on, and we're not advising anybody not to pull permits if property needs to be pulled permits, but they get a lot of their information on permits being pulled. Is that the main source of their information of like what a property has or has not?
Yes. So a lot of times a worksheet for a property will not be updated unless permits are pulled. And at that time, the depreciation amount will change. If there was an addition put on, they'll go out and remeasure for the square footage. Some counties have enough time and resources that they can go through the MLS and see when a property is being resold, so they can check at that time to see, okay, does the number of baths, everything on the worksheet match up with the listing, basically, to see if it's accurate, and they'll make changes at that time.
I'm smiling now because we pulled permits on that property that jumped from $500, and it's just hitting me now that you're saying it. Most likely why it jumped from 500 to 3,500 or whatever it jumped to, which was shocking. The other question that I have, when you purchase a property that's in really rough condition and then you renovate it, I know often you ask for, I think you asked for pictures of property, do you not?
Yeah, we do.
Pictures. And to get the full value out of that, what you're recommending is if you purchase a property and it's in rough shape, you need to be reaching out for the appeal, not doing all the renovations, finishing up the renovation, making the house look amazing, and then reaching out for the appeal, correct? Because in that case, you're going to see hey, I have all these renovations. I have these nice pictures online. Everything looks great. And I'm going to say, hey, I purchased this property and the tax assessment is way over. And they're saying, well, it's not way over. You have, granite countertops, you have new bathrooms. Am I understanding that properly? If you want to do an assessment and appeal, you need to do it ASAP when you purchase a rough property.
This is where it gets a little bit complicated with timelines of when you can appeal. And I'll try and say it as simply as possible. If you can file an appeal upon transfer, also known as a new owner appeal, within 60 days, so it's for the current tax year, which means the transfer had to take place before July 1, and then the appeal was filed within 60 days, you can appeal it based on the current condition for the current year. So that being said, if the repairs are going to be completed after December 31st, by the time that our fee is paid, which is half of 1 year's tax savings, that would be halfway into the tax year for the 2023 year. So let's say you bought the property in April, it's in poor condition. We filed the appeal in May. The property was still in poor condition by January of 2024. Then whatever reduction that we get is going to be for enough of a time frame that it's worth doing. But let's say you're going to have that same property finished in November, it may not be worth appealing. Because when you pull the use and occupancy permit, it'll trigger a reassessment, which will add value onto the base value.
That's right. Do you know what success rate?
Yeah, so in Baltimore City, it's probably about 97, 98% of appeals. And some of the counties are a little bit more difficult.
You're saying the success rate of property tax appeals are 90%?
The percentage of appeals that we take that get a reduction are about 98% in Baltimore City and about 90% in Montgomery County. That would be our lowest, or Anne Arundel County is about the same, 90%.
Awesome.
We're also taking appeals that have merit. So that's important to understand. Yeah. If a property is not worth appealing, we're going to let somebody know, hey, leave this one alone. It's a fair assessment or it's even under assessed. It's not worth appealing. If there's only a little bit over assessed, $5,000-$10,000, leave it alone. But if it's over assessed, we're going to get it reduced.
Well, let's talk about the areas that you serve. I know we talked about Maryland, but I just wanted to verify that's the only area you serve. If somebody does want to, one of our viewers wants to appeal their tax assessment, they think it's way too high.
Yes, we only do Maryland and focus primarily on the Baltimore metropolitan region, including down to Montgomery County, Prince George's County, closer to the DC suburbs. But generally speaking, Baltimore City, Baltimore County, Howard County, Anne Arundel County, Montgomery, PG.
Gotcha. Do you have any advice for, let's say somebody, I know some of our viewers are in California, some are in North Carolina. Do you have any advice of how a person might be able to find a reputable tax appeal company if they didn't want to go through the process themselves?
I would probably do a Google search and look at reviews. Somebody Google searched our company, found us. We have 5-star reviews. If you're familiar with the local market, you'll recognize the names of several well-known investors in our area that are leaving the reviews. So that to me is more reputable. If you know the area, if you're out of state, you may not. But if you're joining Facebook groups or Google Meetup groups or things like that, and you start to see recurring names and there's people there that are more knowledgeable, and you start to see their names besides asking for referrals from those people, if you're looking at Google reviews and you see that they're leaving reviews for certain companies and you've seen that name before, that to me would have a little more weight as well as a high rating.
I might also recommend people to go onto maybe Bigger Pockets and post a question. Hey, I'm looking to appeal my taxes in whatever state. Has anybody used a reputable company, and try to get referrals similar to what you said. Before we go into the fire round questions, what's the best way to contact you, Dan, if somebody in the Baltimore area wants to appeal taxes?
So phone or email is excellent. Extension 1 if you're interested in starting a new appeal. Extension 2 if you have an existing appeal.
Gotcha. And we'll put it all down in the description so people don't have to rewind the video to reach out to you. So with that being said, fire round questions. What is the average amount you save clients when they do an appeal?
The average is around $1,200 per year. So we generally don't want to take an appeal that's going to save somebody less than like $600 unless they have a large portfolio. And there's certainly been higher ones, but on average, we're about $1,200 a year.
The most amount you've ever saved a client before?
It was just shy of $110,000 per year.
For 1 year? Or was that located just out of curiosity?
It was downtown and it was a commercial building.
What was the disparity? Why was it assessed so, like, that's crazy, 110,000? I mean, I would love $110,000 extra a year.
I could not tell you. I couldn't tell you how the state came up with the assessment, but as part of the appeal process, we did an interior review. I met the state, the assessors at the property. We walked through it. We did a thorough analysis, a capitalization approach. It was very extensive, and the property had also recently been purchased, and the assessment was just astronomical. It was hard to believe how they had come up with such a high assessment.
And somebody slipped on the zero. They left their finger down on the zero. Well, that's awesome for that client. Did they know going in, or did they purchase it and then it was assessed and they were like, holy smokes, I'm going to lose my shirt?
I don't recall if the tax bill was that high when they bought it, but it was definitely overassessed substantially. They reached out to us and we got it reduced relatively quickly. It was during COVID, so there was a lot of delays, but we got it down.
Thank you for sharing your knowledge, your wisdom with us today in regards to tax appeals. The last question that I have for you is favorite business real estate book.
I love Rich Dad Poor Dad by Robert Kiyosaki. It's a basic book. I know it's nothing exciting, but I really like that book. It's interesting. It's always been able to keep my attention. It's a good storyline with a true lesson behind it. And I think investing is really about the basics. If you stick to the basics, you never have to go back to them. We can always make things really complicated, but at the end of the day, the numbers are basic.
I mean, it's such an easy read too. So it's good for anybody. If you haven't heard of Rich Dad, Poor Dad, the book by Robert Kiyosaki, we'll definitely leave a link in the description. Definitely suggest you check it out as well.
So from the real property data search where we found the assessment, we can see where that assessment translates into the tax bill. So the state assesses the property, but the local municipality is the one that issues the tax bill. So for example, the property that we're looking at is a Baltimore City property. So the tax bill is calculated by the Baltimore City Department of Finance, and they use the taxable assessment from the State Department of Assessment and Taxation. And on this table here, we can see the assessment, which was $460,000, and then the rate. So everybody has to pay the state rate, and then each local municipality also has their rate. So in this case, the city rate is 2.248%. If we add the two together, it's a total of 2.36%. So their total tax bill based on this assessment is $10,856. This is also an assessment that we got reduced. You could see the prior amount they had paid before we got the reduction was $17,000, almost $18,000. And we just recently got this one reduced, so they're waiting to get their refund back. But that can show you how the tax bill is calculated, as well as seeing the effects of a reduction where an assessment was decreased, which decreased the tax bill. And you can see right there they have a credit of about $8,000 or $7,000.
That's very powerful to see it visually and see what the tax appeal can do for investors. Thanks for sharing, Dan. That's it, guys. If you have any questions for Dan, I'll have his contact information in the description of the video, as well as you can leave a comment on the video as well. So then everybody can benefit from you asking a question, and Dan can respond, I can respond. Thank you, guys. If you haven't already done so, I'd love if you like the video, give it a thumbs up, subscribe to the channel, and we'll see you on another educational episode to make everybody better investors.
Thanks for having me.
See you guys.